Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips, rocking and rolling, 31st of July, 2016. No trade calls, no recommendations. Every response for their own stuff. The fact you're listening to this means you're ready to understand you accept all the disclosure disclaimers here on the blog, understanding that we're just performing some technical analysis for learning context. Okay, so what's happening, guys? Now, keep in mind, we've had some decent action, and we're going into an interesting week, or at least potentially an interesting week ahead. We've got China PMIs out on Monday. So, in the overnight session, we got all the PMIs out. So, also out of the UK, out of the US, et cetera, all the European PMIs. Tuesday's really going to be very interesting because we got a bunch of Australian data, but we also have that RBA rate statement, which a lot of people are looking forward to. Then we're going into Wednesday with ADP, all the services PMIs, crude inventories, and then Thursday a lot more data out of Australia, a lot of data out of UK with a BOE, right? So basically we got two central banks on deck this week, RBA on Tuesday and BOE on Thursday, and then on Friday we still have the RBA again with monetary policy statement, and we have non-farm payrolls out of the US. So it should be a fairly interesting week. So what to look for? So first things first, if you're looking at the ES, I mean, we had a shockingly tight range last week, right? Very, very tight range, holding here, not going anywhere, right? And we've been stuck here for a while. So the outlook doesn't really change for us. We think as long as we trade above 2165s, the risk is that the market will continue to try and press higher, will continue to try and take stabs towards these 2190s. You've got that psychological 2200 level, and that's where we are now. So it's holding bid. It's very difficult to say this looks bearish, right? One thing to keep in mind is, though, the fact that it's taking so long, we're going into August and it's not really going anywhere. What we would say is that if it can get some traction quick and we start to trade below the 2065, what we would expect all these lows to try and get taken out extremely quickly, right? So we would think 2133s come into play extremely quickly, and if those go from a daily close, then don't be surprised to see us moving back into the 21, right? Daily close below there, we think 30 handles to the downside could come relatively quick, but right now we're just stuck in a bit of a wait and see scenario around these 2165s, and this is going to be the bull bear line going to week. So we just have to be patient, but there's plenty on the news calendar, there's plenty on the wires that's going to come out that should give us some kind of decisive move. Okay, if we're looking at gold, what's happening on gold? So we discussed the fact that any hold of this area, we were expecting price to move back into the 1350, right? As far as we're concerned, we're in a 1300, 1350, 1400 range, right? Now, what's particularly important is now that we've bounced twice here and we're back at this pivotal 1350, we feel that if price is going to try and take a stab at that 1400, it has to do so quickly. So as long as it holds here, we suspect it's going to try and take a stab at these highs, but don't be surprised to see a move back into the 1300 if we can't get traction quick. So again, no big change. We're still at the 1350, pivotal inside this range, but remember, this level is being tested twice, right? So it's going to be when levels keep on getting tested, we like to talk about it's kind of like a wave hitting a wall, right? As long as it holds, it holds. But the more the wall gets hit by the waves, the weaker structurally it becomes. So when it breaks, it can be aggressive. So just be cautious with that, okay? Now, CAD, what's happening on CAD? No big change. A lot of wheeling and dealing on crude. Our outlook hasn't really changed as long as we hold above these 129s from a day close perspective, this pivotal area, which the market is holding this whole series of higher lows. We've got two moving averages coming in here. We've got the 50 and we got the 100 DMAs coming in. As long as this support holds, we still expect to see a rotation back into the 135s. Below there, then 125s will come into play, but for now you have to expect that support to hold and be solid, okay? Aussie, Kiwi, we got all that RBA stuff. We got some New Zealand data out. You know, it's all about those rate decisions, right? So I think pretty much everybody's expecting the RBA to cut. So if they don't, surprise, expect to see fireworks there. And the other big question is, are they going to give indication of no more cuts or more cuts? That's what to watch out for, right? So this hasn't changed for us in terms of chart. Bull bear lines, very bearish on a daily close below 75.30s, bullish on a daily close above 76.20s. Keep out here. You want to watch out for failed breaks, but sustained hold above. We expect these highs to come into play, 78.60s. Even if we get a lot of shenanigans on the RBA, but we close back below here, we would expect to test these lows, try and test all these series of higher lows and come back towards the 74s. And again, could be a lot of interesting positioning and squaring, and that's the same thing with the Kiwi, right? As it's holding above these highs, you have to respect this previous support, got a bit of a bid, and here the question is, are we going to top again or are we going to fly? The level to watch is that 72.70 from a day close perspective, bearish below, bullish above. Watch out for false breakouts and failure to hold on all the wheeling and dealing, but below here it still holds heavy. Now if it does turn, we'd expect this time this level to give way and a move back into 66, 67s, okay? Now what else have we got there? Crude, no big change, right? Our first target was 42 40s. You can go back on all the other discussions, all the weekly outlooks. We discussed this pattern in detail and why we thought this was corrective. And, you know, we expected it to bounce a little bit here and then try to come back down towards the 38.80s. It's just gone knife through butter. So right here it's looking fairly heavy. You'd expect any bounces to get sold and you'd expect price to slowly come back into this 38.80. If you look at one of the previous sessions, we discussed in detail why, whether you're a bull or a bear, this whole zone holds the key. Extremely important, whether it's for a retracement of this move down to come back down and shoot back and print 57.60s, or whether this is holding this whole channel down, and even though it bounces here, we're coming all the way back into 26s, 25s, okay? We discussed this in one of the sessions, so it's fairly interesting. What else we got? Yen, as we said, we were holding here, and we said it's all about the BOJ, and we'd expect to get a hold above or below for the BOJ to indicate the next move. BOJ disappointed, down. Now, I'm going to say exactly the same thing we discussed last time. No matter what happened out of the BOJ, keep in mind that we don't feel it's extremely high odds to short into these kind of areas, right? So even though we see a lot of wheeling and dealing, we suspect the market to see a lot of squaring, positioning, and long starting to get interest from here all the way into 100 for the market to slowly base and try to come back towards these levels into the September BOJ meeting. We'll have to see, wait and see, but clearly a daily close below the 100 is extremely, extremely bearish. Unless we get that, our expectation is for any weakness back into this level to find buyers and to put in the similar kind of action into the September BOJ meeting, okay? Now, what else have we got here? Euro, as we're trading here on Euro, we discussed a lot in the same ways we talked about yen. We don't understand why people would want to get aggressively short into this kind of action. We prefer to do the opposite, right? We talked about the 112 being pivotal, and that's where we are here. So watch the 112 being pivotal. We'd expect sellers to come in on any bounces, you know, all the way here into the 1230s. You've got this 100 DMA coming in here, right? You probably got a fib of that move down. It's not a fib we would have, but we'd expect this whole area here to find plenty of sellers, right? And we're very interested to see what the action here, but the 112 is a bull bear line. This could easily rip into 1340s, but we expect sellers to emerge way before that, right? And to ultimately try and come back down below the 112. Now, last but not least, had a question on if I could review DAX. And basically what's going on DAX, so you see DAX here on a weekly, we're going here, we had a very aggressive sell-off and we're trying to hold this downside channel, right? So here we've got a lot of sloppy action around this level, and a lot of people have been asking, is this a time to get short DAX? Now I think it's very tricky. Clearly this is an important area, and if you want to get short, this is the area to start to look to get short, but it's tricky, right? Because you see you've also got this basing pattern. So I think it's far from being a clear pattern, right? Far from being a clear pattern. If you look at it on a daily, what I would say is, right, as much as I think it's not expensive enough to get short, I don't think it's cheap enough to get long, clearly. Now, what you would expect is on any dip, you would expect this breakout now should act as support. So as long as price holds above here, you'd expect it to stay bullish and to continue to try and test these upside levels and to break this whole shaded area, right? So, but the only thing I would say is be very, very cautious about chasing the longs up into this level, or if we start to get failures here, because the way this is trading, I'd much rather see this try to press and fail into this level, whatever, to try and look for some kind of a correction back into this zone. So if I could look for shorts higher up back into these lows, I think it's far more interesting, but right here, not too interested in engaging in anything in particular, okay? So I hope that was useful. As always, guys, thank you so much for all the guys who share and like the stuff. Very appreciate it. Have an awesome one. Heads up for a great week, and talk to you guys soon. Take care. Bye-bye.